Hello guys and welcome back on the channel. Today we are going to backtest a new trading strategy from Trading Strategy Testing. I have already backtested a strategy from him in the past and I told you that I really appreciate the fact he was honest. He had a non-profitable trading strategy and he told us it was not profitable and I really appreciate it. But now we have a profitable one, with an average success rate of 47% with a risk to reward ratio of 1.5. But there is a problem. He backtested it only on 100 trades and on really old data. The data are of the May of 2010. So it's not, so the data are not recent. But before I backtest the strategy, I want to tell you that I have created this strategy spreadsheet in which you can check all the strategy I have backtested in the channel with the average success rate and other info as profitable or statistically profitable, with also the risk to reward ratio. There is the link to the video, so you can check it if you want to know some so if you are curious to know some of the most profitable trading strategies I have backtested, you can check it here and you don't have to switch manually on each video. So you can go here, I will leave the link of the spreadsheet in the description so you can check it. But before I start, I remember you that if you want to know more about my software or you want to backtest your strategy, write me the email that I will leave in the description. So I will backtest the strategy on this Forex pairs and on the 1 minute time frame. So let's see some successful trades. This strategy has only two conditions. Only two. The first one, in order to open a long position, you have to check that the EMA 50 goes below the EMA 100. And here it happens. And then you have to check that the stock with these settings 553. So you goes here and type stock, the first one. For the EMA, you goes here and type EMA. This one I used. You have to check that the stock goes above 20. In this case, it happens and it was a successful trade with a risk to reward ratio of 1.5 and a stop loss of 10 pips. Let's see a not successful one here. As you can see, we have that the EMA 50 goes below the EMA 100, the stock goes above 20. You can open a long position. In this case, it was a fail. Let's see a short trade. So you have to check that EMA 50 goes above EMA 100. Here it happens. The stock goes below 80. Here it happens. Stop loss of 10 pips. And in this case, it was a success. This strategy seems profitable. Let's see how it performs over 1 year of data. As you can see, quite good results, but there are some problems. As you can see, the average success rate is greater than the average success rate to break even. In fact, it was profitable, but not profitable with commissions. And it was also not statistically profitable. As you can see, it doesn't go past the average success rate to break even. That's not good. And we had, let's see, we had 10 fails in a row. So you would have lost 10% of your starting account during the time the strategy was tested. So for now, it doesn't seem to be really good. Let's see if we can improve it. I never give up, and only for you I will try with statistical analysis to improve it. So I have already downloaded the trades, and the first thing I found is that there was no difference between the average success rate for buy and sell. As you can see, it's almost the same. And for today's video, I decided to use ADX14 to improve the strategy. And what I have found that if you have checked for at least one candle in the last 3 before the position was opened to have ADX 14 above 25. So you goes here and you search ADX, this one. If you have checked for these conditions, the new average success rate would have been 43.7. And the same thing was noted for short trades. So this pattern is common between long and short trades. So that's pretty good. Let's add this criteria to our strategy and let's see if we can improve it. Let's run again the strategy and let's see how it performs. Okay, now we are talking. We have a new average success rate of 44, greater than the one we were expecting, due to the fact that new positions were opened, and yeah. But there is a problem. The strategy is not statistically profitable. As you can see, the lower bound of our confidence interval doesn't go past the average success rate to break even, and it didn't perform very well with commissions. So that's not a good trading strategy. Let's see, for example, how many fails there were in a row. 8. As you can see, also the fails in a row decreased, and that's good. But in the overall, the strategy it's not so good. But let's run anyway the strategy on the test dataset in order to check that we have not overfitted it. Let's see. Okay, as you can see, the average success rate it's not so good, it's almost break even, but it's still the confidence interval we have calculated before, and it's important. The balance it's almost the same of the starting one, but with commissions, yeah, this was not good. So, in conclusion, I would say that this strategy probably is not one of the best we have tested on this channel. Surely we can, maybe we can improve it with other criteria, I don't know. But for today's video, I think is all. I remember you that these are not financial advices. I'm not a financial advisor. Do what you want, pay attention. Trading is very dangerous. And I'm not responsible of any use of this strategy. If you are not profitable, I'm not responsible. Don't try this strategy. I'm not telling you to try it. Make your own considerations. So, if you enjoyed this content, I remind you to leave a like, leave a comment, subscribe, and see you in the next video. Bye!